Hi, my name is Mike Jesowshek, CPA and founder of JETRO and Associates, and today I want to talk to you about some tips on how to avoid getting audited by the IRS. And just to preface this conversation, generally stating being audited by the IRS is pretty rare, but by not implementing some of these strategies, you definitely increase that chance of being audited. So I just want to start out by going with large personal tax deductions. So this might be things like charitable contributions. Oftentimes, the IRS will look at this and say, okay, if your charitable contributions seem to be a little bit too much for the income, that might be a red flag. And in a case like that, they might just ask for documentation. So it's important that if you maybe do have high charitable contributions compared to your income, that you have the solid documentation ready to back that up. The next thing is excessive business deductions. And what this really comes down to is keeping your business separate from your personal. So making sure that as the business owner, you are keeping all of your personal transactions out of the business account and making sure that your business expenses are still proportionate to income and activity. So let's say, for example, you had income of $100,000 or sales of $100,000. Having travel expenses of $95,000 likely doesn't really make sense, and that might be something that raises a red flag. Again, in some industries that may make sense, but just be sure that you're watching your business deductions to make sure that they make sense based on your industry and the type of activity and your income level that you have. And here again, we want to talk about when you're looking at, is a business expense business or personal, or is an expense business or personal? You have to look at two things. Is it ordinary and necessary for your business? If it's ordinary and necessary for your business, go ahead, deduct away. However, if it's not, and it's kind of that red line, throw it on your personal. And the next couple tips I'm going to say are just kind of more general stating tips to try to avoid. The first one is round numbers. Usually that's kind of a red flag to the IRS. If you had sales of $362,000, $362,000, that's likely a little bit of a red flag. So don't round up, don't round down your numbers. Keep your numbers as is because that just makes it more realistic. Now, if you do happen to have a round number as an expense or an income, or whatever it might be, don't change it to help avoid that. But just know that if you have all round numbers on your return, that's likely a red flag that the IRS is going to want to look into it. The other thing is making sure that you're filing your tax return on time. Now, you can still extend your return and make sure that you file an extension time, but just make sure that you're filing your return on time. And a lot of times we see this situation happen with clients that maybe have a tax due or something like that where they don't want to file. And what I say is, file the return even if you cannot make the payment, because if you don't file that return, the repercussions down the road are much more significant than if you file it on time and just make the payment at a later time. And another thing is try to file your return electronically. Usually when paper filed returns come through, it typically means that there's some kind of error. There oftentimes will be grammatical errors, things like that on the return. So just try to file electronically and you're saving trees at the same time. The next tip is making sure you're filing your payroll tax returns and taxes on time and making sure that they're accurate. So this is your W-2 if you have employees. Making sure that you're filing those quarterly, monthly payroll tax returns on time along with the tax payments with them, and just making sure that those numbers are accurate. We definitely suggest using a payroll provider because payroll can be tricky. Even with one employee, we definitely recommend using some type of payroll provider or software to help make sure that you're keeping your records clean and accurate on the payroll side and you're filing those taxes correctly. Another thing is 1099s at the end of the year. If you're paying contractors, anyone over $600 typically, and we have an article that you can look at that explains a little bit about who needs a 1099 and what qualifies for it. But if you're paying contractors, make sure that you're sending that 1099 out because that's something that's going to be a red flag to the IRS audit if you have contract labor with no 1099s. And final tip is just use a professional. When it comes to business taxes, they are much different than your personal. So use a professional because a professional can look at your books, can look at your specific industry and say, yeah, this is an expense that's a little bit too high for that category based on your industry that the IRS knows about. So use a professional. They're going to be able to catch things that you might not notice and just have them do your tax return filing. And those are some of the main tips that we're talking about on how to avoid an IRS audit, but sometimes IRS audits are inevitable. You will get audited sometimes, and in that time, you want to make sure that you're fully prepared. So the next couple things I want to talk about is how to make sure you are fully prepared in the event that you are audited. The number one thing is having accurate bookkeeping and having accurate bookkeeping done on a regular basis. By doing this, you have that bookkeeping that when the IRS comes, you have documentation and support about all the transactions that went through your business bank account and how they should be recorded. The second tip, and we kind of talked about this earlier, keep personal expenses out of your business account. So make sure it's business only in your bank account. And keep good records. Keep receipts. Keep documentation down of other things that you have. When you're keeping receipts, make sure you write down the business purpose. Who was it for? What was it for? Why did you have it? Where were you? Those are all things you can just write on the receipt, keep the receipt. In the event of an audit, it's going to be easy to say, oh yeah, 2 years ago when I went out to dinner, it was with this client and we discussed this, or it was with this employee, we discussed this, and here's why it's business. That's a lot easier to do when you're in the action actually doing it. Put it on file, keep it there in case you need it in the future. Another thing, avoid cash. Cash is something that the IRS hates because they have no track record. It's hard to track it. If you do have to use cash, just make sure you get a receipt, some type of documentation, but just know that even then you might not get allowed the deduction depending on, the special circumstances and what kind of IRS auditor you have. And final tip is just double check your work. Before you do your filing, before you do anything like that, double check to make sure that you have everything entered correctly and everything looks pretty accurate. Again, IRS audits, generally stating, are relatively low, but if you do not follow some of these tips we do in here, that chance of getting an audit will be raised. And sometimes audits are inevitable. They will happen. So just make sure that you're prepared for it throughout the year. You have that documentation. So in the event of an audit, you are good to go. If you have any questions, want to learn more about this topic, or are interested in some of the services that we can offer you, do not hesitate to reach out. Thanks for watching, and I look forward to talking to you soon.